Newton. He's Fundstrat's head of technical strategy. Moment of truth, why?
Well, Scott, if you look at where S&P has rallied over the last 4 days, we've moved up about 200 points. We're right up to close to 3,800. So that is very close to not only early October highs, but also a very meaningful downtrend line near extending down from August. So that's a really key level for the S&P. Other indices are looking the same. So I think we really have to get over there. And also we need to see rates start to peak out before we can really think that any sort of rally has some longevity.
Well, see, that's exactly where we started the show, right? I mean, as much respect as I have for you and respect that people have for the technicals, whatever the charts say, just tell me what the chart of the 10 and 2 year say, and then I'll tell you where stocks are going. It's become that simple, it appears.
That is a little bit of the way to look at it. I would also suggest, though, that markets are actually acting a little bit better in the last couple of weeks. We've seen almost a 5% move in financials. Industrials are up 4%. Technology has started to actually come back slowly but surely in the last week. So, you know, the S&P seems like it's going down every day, but there's actually some internal sector strength that really bodes well for the prospect of markets to bottom out by the beginning of November.
Why do you suggest that the next 3 to 5 days are critically important? Are you thinking about big cap tech that's right in front of us as a reason why, or is there something in addition to that?
So some of this is cycle-based, and we are entering a time the next 1 or 2 weeks where we do have the potential for exacerbated volatility. And, you know, I personally am hopeful that we get past this. I think that my own work suggests rates are very close to peaking out in the dollar. You know, for you non-technical folk, you could say, okay, CPI is coming up November 9th. We have a Fed meeting. We also have an election. So there are some reasons why one would be a little skittish, but you know, everything starts to turn back higher in the early part of November. So I'm thinking really any pullback would still be a great buying opportunity. And I am expecting markets push higher November into mid-December. So, you know, a lot of this is just short-term noise in the near term. But, you know, anything above 3,600 and we're fine. We could go up to 3,800 by Friday, 3,830, and then maybe a minor pullback. As long as we're above 3,600, we're in good shape. If we get under that, then we have to introduce an alternate scenario where we have a potential for downside volatility. For now, I'm not really willing to discuss that until we see evidence.
I got you. Lastly, before I let you run, the oil services ETF. Why do you have your eye on that specifically today in your note?
Well, what's interesting is that actually broke out against the XLE and also against the XOP ahead of today's announcement about oil. And so, you know, energy continues to act fantastic. We've seen WTI crude decline about 10% in 10 days, but energy has been, you know, outperforming the S&P. It's actually been a great sector to be in and has suffered very little weakness whatsoever. So, you know, my own cycle suggests crude is bottoming. I think that energy is still a great place to be. You know, the services stocks look a little more interesting now, the drilling companies and, you know, companies like Halliburton and Schlumberger. So I like OIH. I think energy is still a good bet.
And Mark, I appreciate it as always. That's Mark Newton of Fundstrat. We'll talk to you soon. It's